maybe less tangibly than events, you've got trends and climates that have been changing. And so things like cyber exposure, cyber attacks, becoming more commonplace. They're virtually, a day-to-day event. And the big ones, attract a lot of publicity. And it seems inevitable that companies will have cyber incidents. It's just a question of how bad they are and how they're managed, when they happen. I mean, it's all about how they're managed. I think most people expect there to be these events from time to time, but it's the management of these events that really will test the board and will affect the share price. So those kinds of things are likely to be a driver for claims against directors, it seems to me. Some of the other things that have been happening are more cultural, so ESG, environmental, social governance concerns, that's that kind of thing, the culture of a corporate culture. There have been a lot of changes since the last edition. You could say that they've been long awaited, these changes. It's about leveling up the playing field as far as is possible for individuals within organizations, but also tackling climate change, which has been around as an idea or as a concern for a long time, but is really only in the last few years as there's a concerted push towards better environmental standards, more sustainable industry, biodiversity, preserving biodiversity, and reducing the risk of the oceans getting warmer. Well, that last one, we're not doing very well, it seems. We've had the craziest weather ever this year, and I think it's just a question of how much worse things are allowed to get before people start taking it seriously enough. It's really governments that we're talking about here. I think on the business level, I think there are strong indicators that there are strides being taken. Business is much more focused on it. ESG is a business issue as well as a social issue. Making sure there's enough of the right talent in your company at the right levels is a business issue. It's not just a fluffy cultural one. It's one that actually will help the companies to make better decisions, and get less criticism in public, that kind of thing. Obviously, reacting to the financial risks of climate change is a business imperative. For some industries, it's absolutely key. For other industries, it's perhaps less direct, but it'll affect all business. And there's certainly signs that the investment community is thinking along those lines. They are being more careful about where they put their money, and there's a strong push towards more sustainable places to put the investments. So there is a backlash against that, of course, too. I mean, in America, certain states have been trying to enact laws or bring cases against investors or companies that appear to be going too far the other way, in their opinion, and essentially sacrificing immediate gain or immediate profits for investments in things that are going to take 10, 20, 50 years to actually materialize in terms of benefits. And there is going to be this tension in companies, and we're seeing it, with the Shell derivative action here, which has failed. But what we're seeing is the tension between some shareholders who think that companies should move more quickly towards carbon neutral, etc. And there are those shareholders who are very happy with the way the companies are behaving now and making lots of money now. Oil companies are making more money than ever because of the energy crisis. Why move towards renewables when you can make much more money as an oil company? And of course, both sides in a way are right, because the people who are complaining about not moving quick enough are seeing a time in the future when these companies may become obsolete, or at least much less relevant, and much less able to deal with climate change if they don't start making changes now, and versus the people who want to keep making their money now. It's the short term against the long term, and it's a continuous business problem. I think that short-termism is a major cause of securities claims against boards, because they make decisions for they're worried about the financial statements of this year. They're not really thinking about the financial statements in 5 years. These board members may not even be on the board in 5 years. They probably won't be. I mean, the way in which boards change which is a good thing. They change from time to time. Why make changes now to benefit someone who's going to be sitting on the board in 5, 10 years' time when you've retired? So I think that is a very legitimate debate that's going on. But climate change in particular, because it's a long-term thing and it moves gradually, is causing a lot of tension, really, as to whether you tackle it now or you tackle it later. So I would put myself in the tackle it now camp very strongly, because I think that companies will start to feel the effects soon. It isn't going to be a long-term thing anymore. The effects are going to be felt sooner, and probably in the next few years. So really, it is an immediate concern. It isn't something you can kick into the long grass.